This week, Core Realty and Associates sat down with Irene Borum of Abacus CPA to discuss real estate, investments, taxes, and wealth. Let's listen in.
Let's talk about your clients and your first-time home buyers, right? Or even
Okay.
people who are buying a house a second time or first-time investors. Even if they bought a home, like I bought my own first home on my own when I was 25 years old. So,
Mm-hmm.
but I had bought homes previously with other folk, like my parents and ex and stuff like that. So I
Mm-hmm.
had a little bit of experience, but still, when you're first-time home buyers, it's more about the emotional aspect
Yes, it
than
is.
what you're thinking about the actual financial aspect, and your
Mm-hmm.
brain is overtaken by your heart and your emotions.
Mm-hmm.
So people don't always go out and do what they need to do to prepare. So I was telling them on Saturday, one of the things, if you have someone that comes to you, I
Mm-hmm.
would ask them, have you done A, B, C, D? And I know a lot of y'all probably have these conversations. Have you looked at your credit? Are you up to date on your taxes? Are
Mm.
you are you familiar? Are you a 1099 employee or are you self-employed?
Okay.
Because I can almost guarantee you 8 out of 10 of them have written off every single thing that they can write off and probably then some in
Mm-hmm.
order to minimize their tax liability because they weren't thinking about the income requirements or that debt to income ratio that they were going to have to face when now they're ready to buy a home.
Right.
So what I do oftentimes is I partner with agents, I partner with lenders to say, okay, even if you have some ideal clients that walk in and they're all good, but a lot of them, especially in our communities, just are not, because financial literacy and understanding what debt to income ratio means, understanding how to balance what you owe the IRS
Mm-hmm.
versus how you qualify for a mortgage isn't something they think about. They're like, okay, I got a good job, I got either tax return, somebody left me a little bit of money, I was able to
Mm-hmm.
save money up. I think I got enough. They tell me I can get zero down. I don't
Yes.
really need anything. So give you into that zero down payment. I
Mm-hmm.
got a job, I got my side hustle, I'm making the money.
Mm-hmm.
Now I'm ready to get my house. I saw this house over on X street that I know I should be able to get into. Oftentimes the reality is that house is probably $200,000-300,000 way more than their income will qualify them for. So that
Mm-hmm.
realization and the reality of what they can afford versus what they think they can afford and what they will be approved for, in part, especially if they're self-employed, because of the way they've done their taxes or have not done their taxes.
Right.
And then if they haven't filed their taxes, or they filed their taxes incorrectly by writing everything off to where they have a loss in their business
Mm-hmm.
just because it lowered the tax liability, what does that mean to them if I have to amend their taxes and now you have a liability to the IRS? A
Mm.
lot of underwriters will say that's now it increases your debt, especially if you're not in a payment plan. They force you to be in a payment plan. So now your debt goes up because you have this monthly payment to the IRS.
Wow. And that's something
So
that
a
most
lot
people don't think about.
they don't think about that. So even when we amend your taxes, now you're owing the IRS 10, 15, somewhat up to 30 plus $1,000. That's now debt and they
That.
see it. They put you on a payment plan. So now your monthly recurring payments out the door goes up. So
Mm.
you got to balance both of them. And a couple of things as a self-employed person, and this goes for you agents too, because you're 1099, most of y'all are 1099. Um, there are ways to write things off that are legal. Like for instance, things like depreciation. So say if you have rental income and
Mhm.
say if you have properties and then you're buying things for your business. So you might go buy a laptop or you might go buy a car or you might go buy what we call large ticket items. You don't
Mhm.
have to expense them all. You can capitalize some of those and amortize the depreciation over time. Here's two benefits to that. It
Okay.
spreads out your expenses to line it up when you're actually earning the revenue. And
Mhm.
most lenders and underwriters, when they see things like amortization and depreciation, they actually add that back into your income
Wow.
because that's a bookkeeping transaction.
Okay.
So if you take a 179 depreciation, bonus depreciation, and I look at you buy a car, you know you've probably financed that car. So underwriters know you haven't paid all that money out the pocket or out of the
Mhm.
business that year
Mhm.
one. you're doing what we call bookkeeping entries. So if you depreciated, say 20K or $20,000, the business hasn't actually paid 20,000 out of their business account. Some people do, but more than likely you haven't. You put a small down payment or something like that. So what they know is they'll add that 20K back, or at least half of it. Sometimes they'll give you 50%. Most of them add the depreciation back. So take the numbers. If you had 100K in income, and then you have $40,000 in operating expenses, right? So now you're at 60K, but then say we depreciate you by $20,000, right? So now you're down to 40K of taxable income. And then say you have mileage expense, and say there's like most real estate agents and people who own their own business are running around town all day long. So say, I don't remember at the top, but say it's 58 cents for a mile, and say you do 18,000 miles for the year. That's $10,440. Right? So now you just say 10K. Now you've reduced your taxable income to 30K. So now you're only paying 30K taxes on 30K, and it could be less than that. But the reason I use depreciation and mileage is because more than likely that 30K is going to be added back to your income. So now, even though your tax return shows that you're paying taxes on 30K income, they're going to add this 20K back to depreciation and the 10K back on the mileage deduction, because again, that's a bookkeeping expense. That's not really an expense that was derived by spending dollars. You understand? And so now when you go back, you actually have 60K of income on your business income. So when you want to be approved for a loan, and you have, not all underwriters do this, but the majority of them do. So you got to just make sure that they're going to account for mileage, deductions, depreciation. There's a few other things they will add back in. That's more bookkeeping entries. So your tax liability is still low, but your income can still be considered higher when they add those items that they know are bookkeeping entries back. So you still got 60K income out of your business, not even to account your W-2, right, income, but yet you're only paying taxes on 30K. So that's the difference between just going out and writing 100K worth of expenses off because you made 100K of income because you don't want to pay any taxes, to then showing your profitability and writing it off the correct way. If you actually have those things, and understanding mileage expense, understanding 179 and bonus deduction while it's still in existence, and depreciation in general. So they'll add depreciation back. So if you have real estate, other depreciation, so there's 179 depreciation, bonus depreciation, and then there's the depreciation you have on properties you own. And so
you mentioned, I'm sorry, you mentioned something about 179 depreciation. That's a tax term. That's something I've never heard of before.
So 179 depreciation is a tax code. And it says a taxpayer may elect to expense the cost of any 179 property and deduct it in the year the property is placed in service. The law increased the maximum deduction from 500K to $1 million. It also increased the phase-out threshold from 2 million to 2.5 million. For taxable years beginning at 2018, these amounts of up to 1 million and 2.5 will be adjusted for inflation. You can get a tax benefit from buying a new to you car or truck for your business by taking a Section 179 deduction. This special deduction allows you to deduct a big part of the entire cost of the vehicle in the first year you use it, if you're using it primarily for business purposes. Bonus depreciation is a tax incentive that allows a business to immediately deduct a large percentage of the purchase price of eligible assets, such as machinery, rather than write them off over the useful life of that asset. Bonus depreciation is also known as additional first-year depreciation deduction. So it is not just for vehicles. So it's business assets, right? So if you buy a trailer, if you buy it's any business assets that's used for business. There are qualifications, and I'll talk to everybody and say, okay, does this qualify for 179? So you get to take your normal depreciation, and normal depreciation, say, of an asset is, so even if you buy a property and it's a rental property, a business property, you normally is what's called straight line depreciation. You take it and it's divided by 27.5 years for property. So you take that and you divide it over the 27.5 and you get that depreciation. The other thing that most people don't do when they own a home, now this is owning a business property, not your personal home. So I want to make sure those are distinguished. I'm going to talk a little bit more about personal home ownership, but this is mostly about business properties,
Okay.
buying it in, which is why I tell people buy it in your business name. But even if it's
Mhm.
a rental income that is in your name, you still have the ability to write this depreciation off. And also, if you are a full-time or active participating real estate agent, and I think it's over, don't quote me on this. I think you have to do, I want to say 1,080 hours or and pass the passivity test for being a
Mhm.
real estate agent. You have rental properties. You can actually take a full loss if you have a loss on that property, versus if you're an individual and you're taking rental properties, even if they're in your name or in the business name. In the business name, you can take the loss. But as an
Mhm.
individual, and you'll say, well, Irene, this is something my parents left. I really don't want to put this in the business because, then it's put it at risk for the business. I'd rather it stay in our family.
Mhm.
So if you're a real estate agent, it almost works because this is what you do as a normal business. You get benefits for being a real estate agent, or tax incentives for being a real estate agent, just for being an agent. And there's a box on the Schedule E where you check to say, my real estate agent, and you live. I can even bring it up. Let me see if I can bring up the Schedule E.
This
And
is
you
good 'cause I
say, and a
can't
lot of
share my
people miss
screen.
that. A
Oh,
lot of people miss that. If you're a full
yes.
time, because it helps you pass the passivity test. The
Okay.
passivity test says, are you actively participating in this field? That's why I always ask people, are you a real estate agent? Talk to your tax professional or me or whomever about, okay, I'm a real estate agent and I own properties, right? And so you have an incentive for that. But the reason I started going down this path was more about the biggest thing, whether they're your clients, whether they're yours. When you talk about real estate, one of the biggest mistakes people make with real estate property when they are renting it out is they never adjust the basis. So a lot of people say, well, I got the roof changed, or I had to get the siding updated, or I had to put a whole new lawn in. There are some things that appreciate the property, and there are
Mhm.
some things that are maintenance for the property. So when you
Okay.
have these rental properties, there are some things that are direct, what they call direct operating expenses, and you can take in that year against that income, right? But then
Mhm.
there are other things that appreciate the property, which you should increase what's called the cost basis. So if you bought the property at 150K
Mhm.
back in 2020, and now you've put 50,000. Now this is not rehabbing. I'm talking about just over the last couple of years. Oh, the roof started leaking. You have to replace the whole roof. 10K
Mhm.
there, 15K there. Um, Floors got messed up. You have to redo, or you had mad nasty carpet and you redid a whole floor, not one room or a little bit, a whole floor of hardwoods and stuff. So you've incurred over like 3 or 4 years about 50K of appreciating. That's not changing the toilet seats. The toilet seats, that's direct small operating costs. Keeping the
Mhm.
lawn maintenance, that's direct operating costs you will take in the year you incur it. But big expenses, people either write them off that they shouldn't, and if they're audited, the IRS is going to disallow them. But how you
Mm.
take advantage of them, if you bought the house for 150 in 2020 or 2000 or whatever, now over the years you've incurred 50K of appreciable expenses, you're supposed to increase your cost basis as you increase those expenses, which means your depreciation increases. So if you were originally depreciating it over 150K, but
Mhm.
now you put 50K, you should be depreciating it at 200K, and you can do catch up depreciation for years you've missed.
Okay.
And most people don't do that. So that's why filing your taxes correctly, most people are like, oh, it's out of my pocket, I'm just going to write it off. But there are some expenses that are appreciable expenses that increase the cost basis, which then increase your depreciation, which then levels it out over year to offset income the more than 1 year. So a lot
Mhm.
of people want to write everything off in the kitchen sink.
Mhm.
But I ask them, well, what happens when you have nobody even renting right now, or you have one renter? Then what happens when you have a full rental capacity and you got all this income coming in?
Right.
And what are you going to do for all of those expenses besides your ordinary expenses? Some of these expenses should be amortized
Mhm.
over time so you can continue to have a steady tax bill.
Got it.
And so thinking that, oftentimes they're just thinking in the immediate. But again, I went down the path more of, the investor,
Hmm.
your client, or you as an agent being
Hmm.
a property investor.
Yeah.
So one of the things, like on Saturday, I tell people, whether a first-time home buyer or not, once this world of tax deductions and credits and depreciation and all this greatness opens up, you're
Hmm.
going to see how profitable it is and why people say wealth is generated through real
Real
estate,
estate.
because this might be your first home, but
Mhm.
you're going to want a rental property. You're
Yeah.
going to see the investment, whether it's a fix and flip,
Hmm.
something you buy and hold, you fix and flip, and then maybe sell to yourself or another company that you own and hold,
Hmm.
because there's so much passive income and active income you can generate
Mm.
that, and you still can work your regular job. It's just, and
Wow.
then you get the assets appreciating. So not only, say you bought that house for 150K, you put 50K in it, it's increased the value. Not to
Hmm.
mention, over time, if you buy in the right market, that property may now, just because you put 50K in, doesn't mean you just appreciate it for 50K. It could be worth now 200K. And
Hmm.
you've been paying your mortgage, right? So maybe you only owe about probably 125, because they take all of the expense
For
interest
sure.
off.
For
And
sure.
even that, explaining to your clients like their bills, when people don't even understand, the first 10 years is almost all interest expense,
Interest. Hmm.
right? And then how that affects their taxes in a good way. But
Hmm.
just go back to, now you put 50K in, and now you're talking, you built equity. That house is probably worth about 225,000, and you owe what? 125,000. So that means you
Hmm.
have 100K spread. More than likely, they're gonna give you part of that 20% on that 80, right?
Hmm.
80%. So they'll look at 100K and they'll say, okay, well, if your property now is worth 225, you got to back out. So if we'll just say 250, we'll do. Then they're going to say, what's 80% of that? 200K. If you only owe 125, they're going to back that 125 out. They're going to
Hmm.
say you have 75K that you can get a HELOC loan on, or get a
Hmm.
HELOC line of credit. So
Wow.
you've literally, by just keeping the house up for renting status and keeping it up to code and keeping it looking good, you've appreciated, you've built equity, and now you can potentially take a HELOC loan out, or a home equity line of credit, and then go buy another property.
Exactly. And that's what I was just thinking, because that's what I've learned is the way to use property to buy property, which is,
The Burr method.
yep,
So you use the Burr method: buy,
I,
rent, rehab, resell, repeat.
yeah, repeat.
Like, you just keep going. And it's people think, oh, I don't have the time to do it, or this is crazy. No, once you really get them excited, that's why people are like, I mean, you really love finance and accounting. I like the freedom it gives me, because to
Yes.
me, it's like this: you get up and you go to work every day,
Hmm.
right? And
Hmm.
most of us don't mind working. We know it's something we have to do, but nobody wants to work forever. And
Right,
can
for
you
sure.
imagine being able to escalate your income, right? To the point where my daddy always used to tell me, you're only rich when you work because you want to, not because you have to.
Indeed.
And
Indeed.
so we want to get to that place that when we want to be able to not to work, we don't have to. And
Hmm.
to have that excess income. So I tell people I have three money mindsets: there's making money, there's managing money, and there's making your money work for you.
Hmm.
Most of us know how to hustle up a dollar. I don't
Hmm.
care what no one says. If you want that purse, you're going to find a way.
Hmm.
If you want to go on that trip, you're going to find a way. Your rent is due, you about to get evicted, you're going to
You're gonna
find a
find a
way.
way, for
If
sure.
crackheads can find $10 to get crack for their crack pipe, you're going to find money to pay your light bill. I'm sorry. I've been doing this for 30 years. People
Right.
find money.
Yes, for
You'll
sure.
get a second job. You don't
Yeah.
have to be illegal. I say that jokingly, but you get a second job, you get a
Right.
side hustle, you
Hmm.
find a way. If there's something you really want to
Hmm.
do, people get up and they find a way, because
Hmm.
God has these paths for us. We just got to put the work behind them to go
That's
get it.
right. Yeah.
The money's there. It's
Yeah.
just a matter of your input. Your
Hmm.
output is a direct relationship to your input.
Indeed.
Are you going to sleep in all day Saturday, or are you going to get up and hustle, go to that
Hmm.
second job? You're
Mm-hmm.
gonna do what you do for a side hustle, braid hair,
Mm-hmm.
make clothes, do
Yes.
t-shirts, whatever, sell CDs out of here. I don't think they do that anymore, but I'm
But
really
we
aging
know,
myself.
we understand what that is. And I used to work in the salon. So when people came in selling CDs,
Girl, you
we
know how
bought,
much
we
stuff I used to get
understood.
to the salon, sitting in the salon every Saturday. I used to wear my all this hair. Girl, I used to sit in that salon every day. I used to always have cash. Now they got
Yes.
cash out, but I used to
Yes.
always have cash and to be able
Yes.
to get socks,
Yes. Everything.
DVDs.
Oh, God, it was the best time in history back then.
It shows you how that side hustle can lead you to some real income,
Oh, yes,
right? And
absolutely.
so making the money is one thing and then managing it. So now what do you do? So like I work with a lot of traveling nurses too. Real estate's a huge, but a lot of traveling nurses who now want to invest in real estate. So a
Yeah.
lot of people make this money, or you get a windfall, or you make this money, someone leaves you money. Sadly enough, during COVID, a lot of people's parents and grandparents passed away
Yeah. Yeah.
and left them properties,
Mm-hmm.
left them income, life insurance, and different things. And now they all wanted to invest, which I was
Mm-hmm.
so super, like my heart swelled because now you've made some money, regardless of how it came. And
Mm-hmm.
now they're trying to manage it and then in
Absolutely.
reflection, make it work for them.
Right.
So, what do? You put it in real estate because unless you're going to fix and flip, if you want to put in rental incomes, it's a great way to get more income. You can hire a management company. You can put it in a
Mm-hmm.
multi-property, a duplex or 16 doors or whatever.
Mm-hmm.
You can put doors behind you, and that truly creates generational wealth.
Right.
But there's laws and rules and tax returns and things you have to do. So now you started off, say, as buying your first home or
Mm-hmm.
and having somebody leave money to you, or you made the money yourself, hard
Mm-hmm.
work, multiple jobs, whatever,
Mm-hmm.
just being good. So now what do you do with it? You invest it, because what we say, parked money is dead money, right?
Mm-hmm. Mm-hmm.
Money actually loses value over time.
Mm-hmm.
Money doesn't gain value over time unless it's invested.
That's right.
So and back in the day, you used to be able to put your money in the bank. You get a little bit of interest on it, right? You could
Mm-hmm.
earn a
Mm-hmm.
little bit of money, but now
Right.
you're lucky to break even with fees.
Yeah.
So money in just saved in your bank account is not really doing anything for you.
Mm-hmm.
So
Mm-hmm.
when you're having these first time home buyers come in, yes, they're like really pushed by, emotions, whether it is I'm the first one in my family and I want to get it done, I want a place for my children, or other people in my family have done it, I don't want to not do as well as they've done. There's often usually emotions that are driving them behind it.
Mm-hmm.
But what I think really helps is when you start to show them all the other opportunities,
Yeah.
not just the emotional aspect of it, the financial opportunities, the generational wealth opportunities.
Mm-hmm.
Because what a lot of people don't know with home ownership is that, yes, you have a lot of tax incentives. So here's what I've done. I've built, bought, and lived in my investment properties. Why?
Mm-hmm.
Because if you lived in the property, is another little hack,
Mm-hmm.
even if it's a rental income, if you live in the property for 2 of the 5 preceding years, if you're single, up to 250,000 of that capital gains is tax free. If you're married filing jointly, up to 500,000
Mm-hmm.
of that capital gains is tax free.
Mm-hmm.
So even if you're first time home buyers and you're saying, well, I might want to rent it, or I always time the market. Like, when do I think I can sell it at its peak, right?
Mm-hmm.
And have I
Right.
lived in it long enough? Or
Right.
even if you buy a property and you want to rent it for a few years or long term, you
Mm-hmm.
can rent that property for 10 years, live in it for the last 2, and not have to pay that capital gains. Now, there is something that's called depreciation recapture. So a lot of that depreciation that you've taken over those 10 years that you've rented it, you
Mm-hmm.
will have to add that back into the capital gains. But at the end of the day, with those thresholds of 250 and 500, if married filing jointly, you get to walk away with that money in that capital gains and not have to worry about
Mm-hmm.
paying Uncle Sam. It's a strategy. I tell everybody, business world, the tax world is a chess game. You
Yeah.
always got to be thinking 3 to 5 plus moves ahead. why do I need a CPA, or why do I need? I tell everybody, like, you don't necessarily need a CPA. If you don't have any investment properties, you don't own any properties, you don't have complicated tax structure. If you're just straight W-2, and we do W-2 only clients, you
Mhm.
may not. But if you're sick, you go to a doctor,
For
right?
sure.
If you
Yep.
want to prevent being sick, you go to a doctor. You go to
Yep.
somebody who specializes. I've been investing on my own in real estate since I was 25. Do you think I don't have a real estate agent when
Mhm.
I buy a property?
Yes,
Do you think I
absolutely.
don't go
Ooh,
to the people who know what they're doing and they do it on an
yes.
everyday basis? I
Yes.
might know my situations that I've gone through with properties, but that doesn't mean there's not a new situation. Y'all know most of all the
Absolutely.
situations. And
Absolutely.
the same thing with this is your taxes, besides rent and stuff. Taxes could be somebody's largest liability, right? Especially
Mhm.
for a business owner,
Mhm.
and or the thing that really destroys their business or destroys their future. I have so many clients that
Mhm.
are in tax situations because they've gone to bad tax people. They
Mm.
don't plan. I tell everybody, you want to learn how to minimize your tax liability? Talk to me
Mhm.
now. How do you
Mhm.
stabilize your income? You stabilize your income by building up reserves. And how do you build up reserves? You build up reserves by starting with a budget and by understanding your numbers and knowing what you need. So,
Mhm.
for instance, if your income, married or not,
Mhm.
100% of being an agent, and you know, if I sell 10 houses, my commission at this level, and I
Mhm.
sell 10 houses this year, my commission at this level is going to get me in, I don't know, 100K,
Yep.
right?
Yep.
But I also know, like, okay, I take into account any potential tax liability. I take into account anything that's going to happen that I don't, contingency
Mhm.
reserves.
Mhm.
And this is what it costs for me to live my life,
Mhm.
right?
Mhm.
All right. So if I sell those 10 houses, and that's about, at 100K, so that's about 10,000 a house, right?
Mhm. Mhm.
And then whatever level that, whatever your commission split is. And
Mhm.
then I know I'm trying to do a reserve. So I would say, well, yeah, if you're 100K to live your life, you should have at least 50 to 100K in reserve
Okay.
at any and all given time. And that's going to take time to build up. So that means I would challenge my agent and say, can you sell 12 houses this year
Mhm.
and live like you sold 10, excuse me, and
Yeah,
take
yeah.
those two and put it in reserve. So
Thank you.
now you got 20K that we can put either into a IRA, a long-term investment, a Vanguard or ETF, something that's
Mhm.
now going to earn income.
Mhm.
And then next year you try to see if you could do that 12. I said, okay, because I don't believe in suffering for success, right?
Mhm.
So it's
Mhm.
like, "Ooh, yeah, I had that." Because once you have a number, numbers are powerful.
Yes,
Once you
they
have
are.
a number, you
Yeah.
have a goal, you
Yeah.
go after it,
Yeah.
right?
That's true. Mhm.
You're like, okay, I got 12. I sold 12. That
Mhm.
means you put more marketing in. You put
Mhm.
yourself out there more. So guess what? You're gonna have way more residual effect on that input
Mhm.
that you put in for your output. So that means next year you should probably be able to sell, depending on the market, I know,
Yeah.
14
Mhm.
homes,
Mhm.
right? Say
Yeah.
14. And now let's up you from living off of 10 to living off of 11. And now you put three in reserve.
Mhm. Mhm.
Now
Mhm.
you've given yourself a bonus,
Yeah.
an increase,
Mhm.
and you've also increased your savings.
Yeah.
And so, and then we'll find everybody has their like maximum point, and then we'll find other ways to make money. So now we'll say, okay, so if you put, say, average 10K year one, and you were able to do three now in year two, so now you got 50K plus compounded interest that you've earned from the first year, and you put money in throughout the year. So you
Mhm.
have 50K plus of money. So now what are we going to do with it? Maybe it's time for you to buy a rental income.
Buy a rental. I
You
was
got
just thinking
appreciation in your
additional income.
properties.
Yes.
What have you done in your own real estate portfolio?
Mhm.
And
Mhm.
so that's how now you then make that hustle really, man, that money you make, you managing it. Now you're going to make it work for you. And
Very
it's
good.
small incremental movements. This is a
Mhm.
marathon, not a sprint.
Very good.
And so don't overwhelm yourself. Don't
Mhm.
say, if you don't make the 12, it's okay. Just like we always like, I'm going to lose 15 pounds this month and we gain three,
Absolutely.
right? That don't mean we're not going to try to lose it next month, right?
Right, exactly.
So even if you don't make it
Mhm.
that first try, you pivot, you
Mhm.
learn, you figure out, okay, why did I only sell 11 when I
Yeah.
tried to sell 12? Was it
Yeah.
market? Was it marketing? Was it
Mhm.
I didn't network enough? Do I just not have the time? Is this my capacity? Is this
Mhm.
the capacity for me making money in this realm? And it
Mhm.
could be. And there's nothing wrong with having those real conversations.
You have literally tackled everything that I would have wanted to touch on, for my agents. I know Miriam had to go, but um, you tackle pretty much everything. Kiara has a question. Go ahead,
Oh,
Kiara.
yes.
Okay, so I wanted to know, and Latoya, I was gonna ask you this, but now that she's here, I'm gonna ask her. But you're here, so I'm asking you too.
Okay.
So, as far as like commission goes, like what percentage of my commission do I need to take out to sit to the side to be able, like, when it's time to pay taxes on my commission?
As far as how much taxes you should put aside,
Mhm.
so there's not really a prescribed number because it's going to be depending on how much you make, how many expenses that you make, and then how much you have if you have a W-2 job. But I would say
Mhm.
from a conservative perspective, 10 to 15%
I was
Mm,
thinking that.
okay.
is what you should
I
put
have
aside. That doesn't mean you're
I
going to pay 10 to 15%.
Mhm.
It could be more if you, depending on what tax bracket. If you made $1 million in commissions, you're going to be in a much different tax bracket if you made 50,000 in commissions, right?
Mhm.
And then if you also had a W-2 job. But what I tell agents, if you have two jobs, you can utilize your W-4, that tax form. If you're like, okay, Irene, I got a W-2 job, I got other income coming in, I don't know what my commissions, I don't know, but then you start getting these commission checks in, right? Because you can change your W-4, right? And you're like, I don't want to have a huge tax bill. You can incrementally have them start taking a little bit more money out of your W-2 check to
Mm.
potentially offset the income you might have to pay on taxes at the end of the year.
Now that's awesome. Did
You
you
see
get
what I'm
that,
saying?
Kiara?
Yeah, I did. I'm jotting some down, but
You see what I'm saying?
the only thing
Because
that keeps like coming to my head is just hire you, because I don't, um,
you sound like
when
Johnny. They were
I
like,
understand, I understand
She's
what you're
like, just
saying,
hire you, just
but
hire.
I'm I'm not gonna be able to do it right. I just know I'm not gonna be able to do it right. So I believe in letting people
Mhm.
who are gifted in what they do, let them utilize their gift. Don't let
I
me
hear
get in
you.
the way.
I'm the same way.
But it's not my lane.
Excellent.
It's not my ministry. I'm gonna just let her do it because she knows how to do it. I'm not gonna.
So one of the
She
things
got
I
the she
also
went to school.
Mhm.
girl, did I go to school? I got 4 college degrees in this
Oh
field.
my gosh, that's awesome.
And well, who am I to get in the way of you using them?
To transition more into financial literacy and teaching on
Yes.
my terms.
Yes.
I've taught before, but I want to go keep my firm, but I'll have somebody else run it for me and just
Mhm.
keep um, doing more business development and teaching because that's what I really like to do. As you see,
And
I
you
like to
are
talk.
excellent at it. You really are. I'm telling you. And that's the reason why I had to reach out to you because you flow so fluently and effortlessly in your gift. And you make it easy, just in a little bit that you were saying earlier. You make it so that if someone wanted to invest, if somebody was having issues with their taxes, you flow so easy in it that it gives them a breath of fresh air to feel like I can do it. I can
That's
do
my
it.
goal.
And that's how you know you're operating in your gift because you're giving people hope just by explaining, just by explaining how it needs to go. And most of us fail or we perish for the lack of knowledge. And we're not in a position to hear this information. Or we're listening to people, like you said, we're going to the wrong CPA. right? Who's just telling us how to save, how to keep from, you know, paying taxes. However, in order for us to grow in wealth, we have to show that we're making something, right? So just what you're doing, I can see you going into, focusing more so on the educational side, because that's exactly what we need, is the information so that we won't continue to perish.
Right. And that's what I want to do. My tagline for my business is take the fear out of finance. And
Mhm.
I really want us to have these conversations that we should have had at the dining room table. The
Absolutely.
conversations and that we should have been having in school, in high
Mhm.
school, in
Mhm.
college.
Mhm.
And not that you have to go to college. I don't believe everybody has to go to college. I'm a
Right.
professional student, but I don't believe everybody has to go to college to be where they want to be in life. You have to
Mhm.
have intelligence, and education and intelligence are two different things.
Absolutely, they are.
And intelligence comes from data, reading,
Mhm.
knowledge,
Mhm.
understanding.
Mhm.
But I am very honored. I'm always honored to speak, and I'm always honored to see if I can help people, your
Yes.
clients,
Mhm.
find their path, whether
Yes.
it's, hey, I want to buy this one home and retire in it, or I want
Mhm.
to find a way where things that I thought were impossible were possible, because
Mhm.
everything is possible. I think for oftentimes in our community, we have been told it's not for us.
Mhm.
And I want the message to get out. It is for us. It is harder to get there.
Yeah.
Yes, because there are things that are stacked against us to
Mhm.
make it harder. And
Mhm.
most what's stacked against us is sometimes just our inability or willingness to get the knowledge and to get.
My brokerage, my agents, they only pay me a flat fee. So they keep majority of their commission. I don't do the 30%, 10%, and they pay a small flat fee for their closings, because I just believe in agents being able to, especially with us being virtual, I believe in my agents being able to take home majority of what they make
You
because
should
they're
really,
doing the
you're Black
work.
Girls in Real Estate, right?
Huh?
You're in Black Girls in Real Estate, correct?
Yes.
You really should promote that.
Yeah.
Because you know how many new, I'm not going to ignore your question. Give me a second. But
No,
you
no.
know how many people I see in there asking, you know, but
Mhm. Mhm.
being a Black owned agency, but woman owned agency, and going
Yes.
in there and having a flat fee. And
Yes.
also, a couple of things they always ask how much it costs, and am I going to get any guidance, any
Yes.
training
Yes.
as a new agent? And
Mhm.
if you're offering that and you're trying to find resources for them, like the
I am.
CPAs and other
Yes.
education resources for them, and resources that they can actually do business with and their clients,
Mhm.
when I tell you you're a gold mine, and I
Wow.
think you really should do some videos and really should get in there and even reach out to Janine and explain to her what you're trying to do. And I'll make sure, if you have you spoken with her before, the founder?
No, I haven't. I have not. But yes, I've been in there for a long time. Black Girls in Real Estate. I have been in there for a long time, and I've seen a lot. And I was thinking to myself the other day, is this for like the general public, or is it more all agents?
So she's an investor, she's not an agent. So
Okay.
it's for anyone, any Black woman who wants to get into real estate, whether they're an agent, whether they are investor friendly agent, or just they're typical agent, and or they're wanting to be an investor, or they're an agent who also wants to be an investor. So it's really about Black women who want to learn real estate as a whole.
Yeah.
Because you're in Atlanta too, right?
Oh yeah. Yes, I am.
Right. I would love for y'all to talk
Okay.
about kind of highlighting what you're doing a little bit more, especially for those new agents or agents who are looking to go someplace where they feel a little bit more supported.
Yes.
Because yes, the larger firms are great, but with a flat fee and
Yes.
with the education resources and being a Black woman owned
Yes.
brokerage, I really think y'all should have that conversation. And I think you should market more in there,
Okay.
because the majority of them in there are looking for one of two things. They're either agents or someone trying to be an agent.
Mm-hmm.
Or they're trying to invest. But there's a lot of agents are drawn to there just because of the name, Black Girls
Yes.
and Women. I believe I'm big on grassroots movements, and I believe the biggest change happens at the grassroots level.
Absolutely.
And people like you opening up brokerages for young agents or older agents and giving them the opportunity to thrive, not just trying to take all their money and
Yes.
not just leave them out there in the wind, but you're really guiding them and you're helping them
Absolutely.
optimize what they're doing, because they're going to work harder for you,
Yeah.
and you're going to make more money on volume than anything, because they're going to be comfortable, they're going to feel supported,
Yes.
they're going to go after it, and they're going to be invigorated, and they're like, yes, Latoya has my back, I'm going to be with
Yes.
her, I'm going to do right by her because she's doing right by me.
Absolutely. Absolutely. And that was the goal, to be in a position to help us grow. If I'm in the position to try to take everything you're making, then I'm not an asset to you. I'm not an asset to the community. So in order for young agents like Kiera or even, seasoned agents, if you've been working at a big name, brokerage for years, and you're giving them 30% of everything you make, and then you have to cap on it in order for you to, and you're out there killing it for them, what if you can keep literally 98% of that, 97% of that? You know what I mean? What if you can keep that? Because once you know how to do it, you know how to do it.
Right. And then they're going to refer you out, and your brokerage is going to grow.
I think that's great. And I think it's how we grow. We grow together when we collaborate, and we move in purpose and on purpose. So yeah, I think that's very important. And I am just grateful that you did take the time to spend with us today.
I was just saying I'm grateful as well for her to have come, even though I'm at work. I am gonna go back and watch this replay.
Yes, I'm gonna put it together.
It's just over here like they're about to explode because all of this good information. And it's tax season. Are you taking any more clients?
Yes, we are. We are. I have extra people here. I will make sure, Latoya will make sure I'll text you my link so you can send it to anyone. Make sure I know you came through Latoya, because you'll get 15% off all of our fees, because you're part of Black Girls in Real Estate. Anybody y'all refer, including your clients, I do referral fees bonus, but they'll also get your discount.
Oh, wonderful. That is awesome.
Just book a call, send me a text. Most people have my direct line. Most people have my direct email. I have a team of people that will help you. If there's something that's going on, you're not sure, you want to do a mid-year calculation of your taxes to see what your potential tax liability is from your W-2 income and your your 1099 income, your small business, then all you have to do is there's 30-minute paid, there's 60-minute paid. You upload everything in the portal at least a week before, so I have time to review it. It's a small budget way in order for you to take advantage of the services without having to be a larger client and commit to a monthly or annual amount, right? I do that intentionally, especially for Black Girls in Real Estate. I do it for nurses and estates. Go ahead, just book an hour, 30 minutes of my time when you get to that, and you do it when you need it, right? Versus having to pay for something every month or whatever. So I do that intentionally to be more affordable for people who need a CPA. So I'm excited for you. I definitely want to make the connections. I love your energy. I love your thought process about how to help, because it's, you're trying to help your agents. I really think there's a lot of agents that are in that group that are looking for someone like you. Obviously, you got to vet them and make sure that they're really serious about doing the work. But I think there's potentially a lot of potential to grow your.
Thanks for listening. Don't forget to like, subscribe, and share. Well, thank you again. You have a good weekend or good week.
I wish it was a weekend again.
All right. Have a good one.
You too.
Bye-bye.